Hey guys, Matt here. Before I get into the video today, I wanted to issue an apology. Yesterday, I made a video about THCB and Microvast and this merger that is coming up based around the deadline that was happening yesterday. And some of the information I covered was inaccurate. I rushed the video. I shouldn't have done that, and I apologize because I put information out there regarding THCB that simply wasn't true around particularly with the stock warrant, and then on top of that, I didn't cover Microvast the way I should have. In previous videos, I usually cover the SPAC, I cover the company, and I give my opinion on what I think about it. In the video yesterday, all I did was cover the SPAC with information that simply wasn't true because I rushed and I misread some stuff in the SEC filing. This is a remake of that video, and for anybody who saw the video yesterday, I sincerely apologize. I owe you guys better. I'm going to do better, and I'm going to make sure that I provide you guys all the information that I find in a way that is accurate, true, and with better resources. So with that, let's jump into the video, guys. All right, guys, so we're talking about THCB and the merger with Microvast. So what is THCB? They're a SPAC that has accumulated money in order to take a private company public. That company, in this case, looks like it's going to be Microvast because they've issued a letter of intent to that company saying that they intend on taking them public. Now, there is not a definitive agreement yet. However, that can happen any day. So the first thing I want to do in this video is go directly to the SEC filing and cover some sections that I think are really important for everybody to understand how this SPAC is operating. So here's the prospectus of THCB. So THCB issued 24 million units at $10 per unit, with each unit consisting of 1 share of common stock and 1 warrant to purchase 1 share of common stock. So what's that mean? When they issued 24 million units at IPO of this SPAC, those units comprise of 1 stock and 1 warrant. In order to get the stock and the warrant, you have to buy the unit. Now, this is a little confusing because usually when you go on Robinhood or your brokerage of choice, you're only going to have the option to buy the stock if you look up THCB by that ticker. There's 2 other tickers. And down here, we can actually see that the units and the shares of the common stock and warrants, once they begin the separate trading, will be listed on NASDAQ under the symbols THCBU, THCB, and THCBW. So the U in THCBU stands for unit, THCB is the stock, and the W in THCBW stands for warrant. Now, scrolling down a little bit, to provide some clarification on these 3 ticker symbols, we have this section here that says, in no event will the common stock and warrants be traded separately until we have a filed current report on Form 8K with the SEC. Well, what's that mean? When they went to IPO with these 24 million units, it only came to IPO as THCBU, which is the units, to be purchased at $10, which, as previously stated, comprised a stock and a warrant. So now for some additional clarification on these 3 ticker symbols, we go down to this section regarding trading. So the units will begin trading on or promptly after the date of this prospectus. That's specific to the units. The common stock and warrants comprising the units will begin a separate trading on the 90th day following the date of this prospectus. So 3 months after when this prospectus was filed, which was back in March of 2019, would be when the common stock and the warrants could be separated out from the units to be traded separately. So a little bit further down, then we see once the shares of common stock and warrants commence separate trading, holders will have the option to continue to hold units or separate their units into the component pieces. So basically, when this IPO came out and people were buying units around $10 per unit, they also had the option to split that unit into the common stock and the warrants. So to show this visually, Up here on NASDAQ.com, I've got THCBU. So this is the units that still actively trade on the market on the NASDAQ. And they're currently closing yesterday at $15.60. Now on the next tab over, I've got THCB, which is the stock you'll see on any of your brokerages once you look up this SPAC, and it's trading just under $12 this morning on the 4th. So it's at $11.96. And then you can actually look up the warrants separately as well. So the warrant trades under THCBW, which is currently at $2.10 from their close yesterday. So unless you're buying THCBU or THCBW, you're not getting a warrant with your stock. This was part of the misinformation that I had out yesterday. So I want to make sure that I drive that home. THCB is only the common stock. THCBU is the unit which comprises the common stock and the warrant, and then separately you have THCBW, which is the warrant. Now going back to the SEC filing, I want to jump into the warrant and how it's structured. So each warrant is exercisable for one share of common stock at a price of $11.50 per share. So the strike price is $11.50. And if you exercise the warrant, you get one stock back. So clearly, if the stock is trading in the future above $11.50, the warrant becomes all the more valuable because if you exercise it, you get the stock at $11.50. Granted, you have to take into account what the price of the warrant is to make sure you're covering the price of the warrant plus the strike price. Now, if we continue reading here, the warrants will become exercisable on the later of 30 days after the completion of an initial business combination and 12 months from the date of this prospectus. So with the latter having already been passed back in March of 2020, the warrants are exercisable 1 month after the merger. Now, the time span that you have to exercise these warrants is actually 5 years. So you have a long time. If you purchase these warrants or if you purchase the units, you have quite a while before you're ever forced to come up against a deadline to either allow the warrants to expire worthless or exercise them. So most likely these warrants will turn out to be profitable based on the company that this SPAC is potentially going to merge with. All right, now jumping down a little bit further, another area I wanted to cover was this area called limited payments to insiders. So something I like to focus on when I'm looking at SPACs is how do the insiders of the SPAC actually get paid for their involvement in the SPAC? And this is actually a very good looking structure where it basically says that the only fees that are being reimbursed are a $150,000 loan to this person who provided funds to THBC. It looks like this same person also provided office space related services, so there's a payment of $10,000 per month for that. But besides that, I'm not seeing anything of where people are able to cash out profit ahead of the merger or anything like that, which is actually a really good sign. So now that I've covered THBC, the SPAC, I want to go into Microvast. So Microvast is, looking at my notes here, it was founded in 2006, and it's got 6 locations worldwide with over 2,500 employees. So it's a pretty big company. They currently have over 426 patents and patents that are pending that range on all kinds of elements of the process for a battery chain, from the actual materials all the way to the very back end of a battery chain up to the management system for the battery. So they cover every aspect of the battery. So what makes their batteries so special? Well, the battery technology that they've been developing pushes on the fact that they can charge very, very, very quickly. In as little as 10 minutes, a battery can have a full charge. Not only that, but their technology is also pushed that they have limited degradation, and currently the only competition that they have on the market that is close to the limited degradation that their batteries experience is Toshiba. So in this respect, they are at the frontier of very, very, very rapid charging and the limited degradation that their batteries will face over their lifespan. Now, as of roughly 2 months ago, they currently have their batteries installed in over 40,000 vehicles in 170 cities in 19 different countries. Why is this important? Well, it's given them quite a bit of data on how their batteries are performing. So the batteries that are currently installed, there is currently 0 operational accidents on over 4 billion kilometers of distance traveled. So this in itself is very promising and reassures us that they actually do have quite safe battery technology. So what is their plan to implement these batteries on a more global scale? Well, they're pushing something called the Clean City Transit Project. And the Clean City Transit Project is basically how they want to step-by-step implement their fast charging safe batteries into an urban infrastructure. So first they want to start with city buses, then they want to take it to taxis, and then they want to take it to passenger vehicles. As of right now, they already have them in several buses in many different cities around the world. And as I mentioned before, it's been very promising. So what are the risks with investing in this SPAC and proposed merger with Microvast? Well, as of right now, there doesn't seem like there's very much financial data out there on this company. Currently, there's just the word of the CEO that they have 100 million in revenue this year. With that, though, I'm pretty sure everybody feels pretty safe regarding how EVs are trending up and will continue to trend up. So I'm sure they will see explosive growth over the long term. But with 100 million in revenue right now and their current valuation at 2 billion, it all depends on how you see this technology blowing up over the coming years. So if you feel that the valuation is just right for a year or 2 years out right now, this could definitely be a good buy for you. But one thing to take heed of is just in case you feel the valuation is too high based on their current revenue, then the price may not be quite as worth it just yet. So this is definitely an interesting SPAC. It's definitely an interesting company that they're merging with. It's something I'm going to be paying attention to and something that I'll be watching here over the next several months. Now, with this merger deadline yesterday that actually just got approved to be extended through April of next year, it looks like as soon as we see a definitive agreement, a DA, this stock will probably start pushing up again yesterday, just the same way it did when the announcement that the extension was actually approved. And then of course, as we approach a merger date, the stock will undoubtedly trend upward as well. So guys, let me know what you think. Is this a stock that you're going to be investing in? Are you going to be buying warrants, just the stock, possibly the units to get both of them in one unit? Let me know what your strategies are, what you're trying to do. And if you appreciate the video, then please subscribe, like, let me know what you think in the comments. I'd love to have a conversation with you. And until next time, guys, see ya.